Welcome to the Innovation Conversation, a podcast about innovators, both in business and real life. Hosted by myself, Ricardo Pascual, and Harry McDonough. This podcast is also sponsored by ODEV Tech. ODEV Tech is your premier software development partner. Make sure you check them out at odev.tech. The podcast is also sponsored by Notion.so. Notion is offering 6 months for free for new users. Make sure you check out our website, thestartupevents.co.uk, to redeem this offer.
Hi, and welcome to another episode of the Innovation Conversation. Today we are joined by Sumeet Ahuja. Sumeet, welcome to the podcast.
Thank you, Ricardo. Pleasure to be here.
Sumeet, would you like to introduce yourself to the audience, please?
Yes, absolutely. And again, thanks for the opportunity. So my name is Sumeet, and I'm based in the San Francisco Bay Area, the innovation capital of the world. And of course, there's many more. So this is the right podcast for me to be on. I like to describe myself as a product builder and an innovator. And I've been in the product technology innovation space for the last 25, 27 years across different industries, telecom, mobile, blockchain, and AI. And I'm currently the founder and president of Evoke Impact, which is a boutique product and strategy consulting firm. And we focus on enterprise, universities, and startup ecosystems to help them with their innovation journeys.
Also, quite a lot on your plate, and you're just on the epicenter of all the innovation in the world. So quite exciting to be there, I imagine. How did you get started with all these? Because obviously, did you grow up in San Francisco or you moved there? What was your journey like?
Yeah, so I think there's many ingredients, behind the scenes. There's not one particular reason or one particular factor that caused me to be where I am. So I was actually born in the Middle East, lived there for several years, moved to India, went back to the Middle East, came back to India. And then after my high school, which was in New Delhi, I moved to the US for undergrad. And I got a degree in engineering in Wisconsin. And very early back in the 2000s, I moved to the Bay Area. So I've been here for quite some time. And my career then took off in semiconductors when, semiconductor was really just the only thing being talked about. There wasn't any even internet or AI being talked about. But I built my career from that point on into semiconductors, into telecom, mobile, and then moved into fintech and blockchain and AI with, companies such as AT&T, PayPal, and Circle. But the common thread across all of the things I've done in the past, I would say is, and maybe this is the fact that, you're in the Bay Area and the Silicon Valley and, some things are more available to you, is that I was able to work on some cutting edge technology and products right from the get-go, whether it was in semiconductor testing, where it was building out some of the first converged entertainment services running on fiber optic cables, fintech when it was booming back in the 2010s, and more recently working on digital finance and stablecoins. So, I guess I'm a sucker for innovation. It just draws me. I like the chaos, but I've been able to build that journey along the way in this fashion. Nothing is linear. Obviously, some of these things are more opportunistic as well. But during this journey, I had a chance to also sink my teeth a lot into the startup ecosystem, and because, like I said, I enjoy disruption, innovation, and actually working with people who are bending the curve. And through this path, I was able to work, on some advisory roles. I got a chance to invest in some companies. And again, when you start doing certain things in a certain direction, more doors open up to you. So on this path, I had some folks come and say, hey, you should be teaching at some universities as well. So that kind of opened up doors for me to teach in Barcelona, in Bangkok, and other places. And then all this coalesced into, saying, I need to do something that really drives innovation, but I want to enable it through bridging the skills gap, which I see emerging quite a lot in the Middle Eastern region, in Asia, in India, and Latin America. And hence, my company, Evoke Impact, was born. So really, the journey is, there's a little seed of innovation right in the beginning of the career, and then it kind of builds like a snowball over the time, and here we are.
So you've been in a lot of companies, and you kind of, I should put this, you're an expert in all things innovation. What I want to ask you is, what defines successful policy of having a lot of innovators within the company? Like, how do you manage to make that work? Because you work in PayPal, AT&T, Circle. How do you keep, I guess, people under control, but at the same time also very creative and always launching new products?
Yeah, well, I don't think I'm an expert at the level I want to be. There's still a long way to go for me. But yes, I've been in this space for a very long time and have seen what I call the Web 1 to Web 2 to Web 3 journey here and worldwide. But I would say, in terms of how do you run innovation? How do you, like I said, control innovation? How do you measure innovation? I think it's not one single answer, and the cop-out answer is it depends. If you're in a startup, the answer is different. If you're in a large company, the answer is different because the priorities are different. The culture is different. The commitments to stakeholders and markets are different. But I would say that the single most important thing that defines or can lead to innovation in a company is just generally their appetite for risk and also bringing the right talent and the right culture. So if you have the right combination of all of those, and those things are not easy, you'll have one or two or maybe three or maybe not any one of them. So the way that you would be in a large company, I've been in large companies for the most part, and of course some unicorns after that. So the way innovation is approached is very different. In large companies like AT&T, innovation becomes something that becomes sometimes an afterthought. Or if it's something that is more incremental, it takes a long time because you've got markets, you've got large sets of products and people, large commitments to Wall Street. So things can be slower. I moved from a 200,000 people company to a 20,000 company at PayPal. So things became, much faster, like 10 times faster. And then you're actually building products and you're disrupting what I call infrastructure layer. In this case, in fintech, you're really rebuilding the financial systems across the world. So just the nature of the work you do requires you to bend the curve. So the people you bring in, the people you naturally attract, the culture at the top, the empowerment at the bottom, all of those things matter. And some of these things begin to happen more naturally. But I would say that, like I said, the risk appetite, the talent you bring in, and the culture was really, really most critical to foster that innovation. And then I went from a 20,000 person company to a 200 person company at Circle. And you can imagine that's a rocket ship. So over there, you, like I said, you shoot first and then you aim, right? Or you make the commitment and you do things and ask for forgiveness after. So it's just a very different way of operating. But all in all, I would say there has to be something that sparks that innate need that this is who you want to be. So innovation culture doesn't get built overnight. It takes years to build. So those are some of the things I've seen. And now I'm obviously in a one-man show or a two-man show. So 200,000 to 20,000 to 200, now to two people in my company. And, you take the shot first and you aim later. So sometimes you got to go down that path, but not a simple answer, but there are some key ingredients that are necessary to drive innovation.
And, when you teach your uni students now, what do you tell them not to do? Because we know, they should focus on getting talent, on managing risk, and also getting a nice culture. But what do you always tell them? Guys, don't even try to do these things these ways because it's not going to work.
Yeah, innovation, again, is done best when you let ideas fly, right? When you don't put too many bounds around people. But I think innovation just for the heck of it is not worth it because you're burning resources, you're burning time. And, the business world is not very forgiving. You don't get very many chances to come up with a blockbuster idea or a blockbuster product. Unless you're a large company, you have the resources to fail. So I think one of the things I always like to focus on is, let's brainstorm, let's whiteboard. Let's kind of think about how you can actually solve a problem. But at the end of the day, innovation too quick, too fast, too early does not see the light of day. And it just fails. And there's enough precedents in history where things have happened early, didn't connect, and it came back 5 years later or 10 years later, or never came back. So I think one of the most important things as innovators you have to do is you cannot get married to what you're building. You have to stay true to what are you solving for. If you believe that your first idea or your first product or your first tangible or intangible offering to the market, to the people is going to be the end product, you're mistaken. Which is why if I fixate myself on what am I trying to solve for, as opposed to what I'm building, you're better off. Because what you're building is going to change. Investors put money in companies and teams, not because of what you're actually building. It's actually what's the problem space? Is it big enough? Because they believe that if you tackle that, you will find the way to the right product at some point, hopefully fast. But if you're fixating yourself on just that one solution, that may not be the right answer. So as an innovator, as a leader in product, which I've been for the last many years, I like to tell my team that fixate on the customer, on the value proposition, and the rest should flow from there. So those are the things I like to tell, and, in terms of, to do and not to do. Talk to the customers all the time. Talk to your vendors all the time. Talk to your stakeholders all the time.
And, how was it when you made the leap from, big corporations like PayPal and the likes to running your own startup and running your own business? How was it? It must have been quite scary, I'd imagine. Or was it completely organic and natural?
It is scary. It still is scary. But, there's a point in time where you take the leap of faith. And I think entrepreneurs, the way I see some entrepreneurs are, I guess they're born with entrepreneurial mindsets. Some get created along the way, just like leaders are born, leaders are created. So there's a debate in this thing, right? But I'm not the guy who was, sitting under a tree and then an apple fell on my head and I came up with an idea. None of that happened. So for me, it's been a journey of many pieces coming together where I was able to validate my hypotheses, where I was able to build conviction, where I was able to build enough partnerships, and then take that leap of faith when I knew that what I'm doing is solving a real need. For me, it became very clear over the last, let's say, 10, 15 years that, again, I've been in, mobile and consumer tech and fintech. There's always a promise of democratizing technology, democratizing financial services. That's going to level the playing field. It's going to make the world way better. The same thing was happening back at AT&T, at PayPal, at Circle. But the one thing I realized is that, we can give all the financial access to anybody across the world. That won't do anything unless you also prepare these people across the world with the right skill sets, these countries with the right skill sets to use that financial freedom or assets or resources to build for the future. So yes, you need financial democracy, you need financial access across the world, and I'm a true believer in that. But the gap I kept seeing over and over and over again, especially in the growth markets, India, Southeast Asia, parts of Europe, Africa, Latin America, that's 7 billion people. Now think about it. We've been talking about financial democracy for the last 20 years, but still we haven't grown or bent the curve in these markets. And one of the reasons for that is the skill sets. You got markets here that have people who are averaging 20, 25 years old. I can give them all the money you want. It's not going to do much. You need to give them skills, right? So for me, that became very clear that I'm an expert in innovation, product strategy, go-to-market, and I want to map that to bridging the skills gap. And that's how this began to percolate in my head. I wanted to create an impact. I wanted to evoke an action. And that's how Evoke Impact was born. And, we're getting some good traction in different markets, but that's the path I'm on. So scary, but that's how it's kind of all germinated.
And how quickly do you think these skill sets can be taught to all these different markets? Because there's always, I talk to a lot of entrepreneurs here in Europe, and they always say, "Ooh, we should move to the US. The US is where all the action is," which to a certain extent is right. But then you kind of wonder, why don't you start building locally on something, right? Why don't you try and make a gigantic company? Like I'm thinking Spotify, for example, is a good example. Mm-hmm. So how long do you think it's going to take for, the other markets to keep up and to actually get to the same level?
That's a really hard question to answer, Ricardo. And the answer is hard because there isn't one way to do it. There isn't one factor that determines how quickly these economies, these countries can really get to the next level. But I'll say that, the way I think about it is, right now, the innovation that's taking place worldwide, you're either solving for local, regional, national needs, or you're building local, like you said, and then going to the biggest market. The biggest market being, the US and maybe Western Europe and so on. So the answer is there is some low-hanging fruit. If you're trying to build products, services, and offerings and value proposition for your local markets and sell in your local markets, there is a good chance that you can iterate a lot faster than building something that has to go global, but that might make a lot more time. Which is why you see, in parts of Africa, a lot of small fintech companies coming up. You see a lot of things happening in the Indian startup ecosystem catering to hyper-local needs in India. And same thing is happening also in the Middle East, in Latin America. So those things are, I would say, they're not easy. There's no low-hanging fruit. There's nothing that's easy. But those things can be a little bit faster than saying, you know what, I'm going to produce a product or build a product and software that's going to solve global needs, and I'll land up selling in the biggest markets in the world. Those things can take a little bit more time. So it depends on what the company is trying to solve for, what that audience looks like, what's the impact area that you're trying to take ownership of. And that will then dictate your roadmap. That's going to then dictate, do you have the right ecosystem available? You have the developers, engineers, do you have the right investors, the regulations and the policies? All of those things matter. So some things can be done quicker, locally, regionally. But if you're playing on a global scale, then things will take a little bit more time.
Would you ever advise a startup to go and find investors from a different market to invest locally? For example, I know you teach in Spain. Would you advise Spanish startups to go and find American investors, for example?
I think that the landscape in innovation in startups is changing. You obviously I'm a firm believer that innovation is diffused. There's no one center of the world. I mean, if you believe that the Bay Area is going to produce every single tech in the world forever, it's not going to happen. Look at what's happening in China with DeepSeek and so many other things going on, right? So I think there's a big appetite for even Western institutional investors to invest in non-US, non-European markets, right? Because the returns can be maybe quicker. There may be more innovations coming from those ecosystems. So that is beginning to happen. On the flip side, companies in Spain or in other places across the world, in India, Middle East here, they want to access ready capital. And that ready capital, more so with certain strings attached maybe, is available more so in the US. So they will want to come to the US as well, right? To get investments and so on for capital. So I think I see a lot more like a bilateral flow of investments taking place as opposed to what it used to be before, which was more skewed about US investors investing, let's say, in US probably and maybe in the developed countries. But now that flow of money is beginning to happen towards the Middle East. It is beginning to happen in Indian companies and vice versa. So I think it's this acceptance of a worldview that you're going to have entrepreneurs popping up no matter where, and you want to invest in good ideas, good companies, solid traction. So I think you'll see more and more of this.
And how important do you think, for example, things like blockchain and AI are in this process? Blockchain, makes it easier for people to transfer funds and, makes it very democratic, I guess, to transfer money from one place to the other. And the same thing goes for AI, because all of a sudden you can have an entire really good tech team on your computer. Well, not that advanced, but, somewhat advanced. They can actually do a lot of stuff.
Yeah. I've been fortunate to work in both spaces, blockchain and AI. So to me, the way I see these, if you go back to like the early 2000s into 2004, 5, 6, or late 90s when the Googles of the world were being born, it did, and Microsoft and, Facebook and Yahoo back in like late 90s, early 2000s, what they did was to fundamentally change the infrastructure layer of the internet, the application layer that rides on the internet. And that kind of built the platform for the fintechs to ride. It built the platform for other technologies to ride. I see the same thing happening now with blockchain and AI. Of course, AI has been around for a good 30, 40 years. Blockchain is a little bit more newer, 10, 12 years. But the promise of the blockchain, again, blockchain and AI are very different.
Completely different.
To me, the blockchain is a promise right now. We're still, in a way, in early phases of adoption, but I'm a big believer in the blockchain and the use cases that it enables. Blockchain is often confused with crypto. Crypto is just a use case sitting on top of the blockchain. There's so many other things, right? There's more use cases to come. I do fundamentally believe that the blockchain will reshape the internet-based infrastructure to a different level with all, faster, cheaper, transparent, immutability, all of those characteristics that we have from the blockchain. And then you have AI, which of course is on top of everybody's mind and on top of everybody's tongue. But people need to look beyond just using a GPT. AI has been embedded in the things we do for 25, 30 plus years in many ways or fashion, and it'll continue to do so. So I see both these technologies operating on their own levels. Each one is going to face regulatory pressures, policy pressures, national sovereign level pressures from different countries, but they are intersecting. They are complementary. I was delivering a keynote at a conference and I told it's a match made in heaven, blockchain and AI. So I think both the techs will reshape the next 5, 10, 15, 20 years, but we've got to get through a lot of hurdles around how do you monetize certain things, what use cases are most pressing, what are the guardrails to build around both of these, because both of them are just out in the wild at this point. But I see both technologies as being fundamentally the same level of impact as the internet backbone that was built in the late 90s and the early 2000s.
Now, for all these companies just starting out and listening to the podcast, what advice would you give them? And I know there's always a couple of key things that people always say, this works, this doesn't work. What would that be?
Wow.
Quite a lot there.
Yeah, it is. And I think, having a startup or innovation, it's like having a baby. You can give me all the books you want around how babies are born, how do you raise a child. So there are some things that are very common across the board. But when you have a child or when you raise a family or when you have your own ways to move forward, it's very unique. It's very personal. The decisions you make, the priorities you have. So while it might seem like, oh yeah, everybody in the world, has all of the same resources in a way, but it's a very personal journey. So for startups and investors to some extent, and maybe for aspiring entrepreneurs, I would say that it's going to be a very personal journey. No matter what people say that this is the playbook, that this is how it happens, fundamentals are important, but your journey will be yours. It can be a very lonely journey as well. There's no doubt about that. So I think product, ideas, funding, go-to-market, talent, ecosystems, all of these are the fundamental execution blocks of building a startup, right? But at the same time, you've got the philosophical angle of building a company on your own. And that's, opportunities don't come directly to you. Opportunities always come in disguise. So as an entrepreneur, you have to be not just be ready and open, but also be willing to take that risk, to take that opportunity. So, one piece of advice I always tell folks is, opportunities will come knocking, but are you there to open the door? This sounds very philosophical, right? But you have to have that openness and readiness. And to me, that readiness comes from just being out there, talking to people, having a mentor, an advisor, being in the right ecosystem. So that's one. And I would say that the second thing, which I strongly believe in, and that's been very true in my case, going back to my journey in my career, been fortunate to work in some good places and build a career that I am very grateful for, is you have to fully believe in the power of non-linearity, in the power of serendipity. As an entrepreneur, as a founder or co-founder, there's only so much you can control. But you have to believe, you have to have the faith that there's something behind all of this, or rather in front of all of this that you can't see. And it's true in my case, when you start getting out there, when you start talking to people, when you put out there what you're doing, when you start demonstrating the value that you can bring, the impact that you can have, things begin to happen. The popcorn begins to pop. Now you can't control, which kernel is going to pop. Well, when you put the popcorn in the microwave and you turn on, eventually it will begin to pop. So, it's just the power of non-linearity. Things will happen in a very serendipitous way. So for entrepreneurs, yes, focus on the hard skills, on the execution, on all of those, but you have to build in your resilience to be able to withstand what's going on around you, to be able to see an opportunity when it doesn't exist, to take the time to be patient with yourself. You can't be patient, with a lot of things, but you need to give yourself the breathing room. So there's a lot of things that I feel need to be done by entrepreneurs on the hard skills side, execution side, but also building your belief system at the same time. And I would say the last thing is, if you're an entrepreneur, there's no perfection. If you're waiting to perfect something, it ain't going to happen. So, progress over perfection is my way to go. And the whole world is interconnected. So what I do, some has an influence somewhere and so on. So those are the things I think about as an entrepreneur, in addition to the hard execution and strategy skill sets that I have.
I'm curious on one thing, and this is, by the way, brilliant answer, which is, what do you do when you face hardships? Because by definition, an entrepreneur is going to face tons of them, right? Either you being the moment to pivot and the need to pivot his or her company, but then also, multiple things. You didn't get investment on time. You cannot find the right tech team, tons of things that can happen. How do you manage all that?
Yeah, I mean, that's hard. I think I'll be surprised if you find any entrepreneur that has not changed their mind a couple of times or hasn't pivoted once or twice. In fact, the purpose of building a startup and entrepreneurship is to find the right end product and service through a process of iteration, through a process of failure, through a process of pivoting every now and then and making sure that what you're doing is really going to hit the mark, that it is going to be in service of the market. But yes, this is where what I was talking about earlier, you have to have those skill sets around execution to be able to understand using just good gut feel, using your mentors and advisors, but also data, that what you're doing, if it's not solving what you want to solve, if it's not going to have the impact that it's going to have, then yes, there will be pressure from investors. So you may have to make a decision that, I'm not going to do A, B, or C, but I'll do this and that. And I'm going to park the other stuff on the back burner. It doesn't mean you'll never get to it. You might get to it at a different time, at a different pace. So it's important that, for me, for example, I've had to park a few things on the side and say, I'm going to pick these up later. I try not to make anything into like a passion project. Because if you become emotionally attached to certain things, your decision-making criteria will be just tied to emotion as opposed to objectives. Entrepreneurship and startups, at the end of the day, it is going to be a business as well. You have to serve the people, your employees, your stakeholders, and so on. So I think you have to have a certain level of objectivity in your decision-making, whether it's metrics around, what's the ARR, what's your burn rate, what are you doing to have more revenue per employee, how many customers have you signed? It could be any of those things, right? But at some point, those metrics will then begin to tell you if what you're doing is actually moving the needle. Based on that, you will be able to decide, hopefully, what you should be doing, what you should not be doing. I think the challenge comes in when somebody is very invested in, like I said, like a very passionate, there's a purpose behind certain things, and you're not able to detach yourself from it. I'm not saying that lose your purpose. There has to be a purpose, but you have to have flexibility to understand that shifting and pivoting does not mean you're giving up your purpose, but it just means that, there's a detour along the way. But yeah, I think it's important to have the right sets of metrics along the way from an execution standpoint, because you can't debate that. I can debate you on philosophy, but not on the metrics.
How do you manage the relationship with investors? I mean, I know you've been on both sides, so how do you manage that? Because a lot of startups have this belief that you should actually fake everything and just, make sure that you have crazy projections and everything is absolutely amazing. It's going to be the next Google, whatever. In reality, we know that's obviously not the case 99% of the time. So how do you manage that relationship? And what tips and advice would you give to a startup to manage that?
Yeah, that's also a really important part of the entrepreneurship journey. And I think just like investors are looking for the right blockbuster idea and product, and they're choosy, right? There's so many things out there. They're very diligent about the entire analysis before they put money into a company or into a founding team. The reverse should also be true. We all know that most startups fail, and in many cases they fail. It's not just about the product. It's also about the investor and founder relationships may not go favorably. So for founders, for startups, they should do an equal amount of due diligence on who they will want to bring to the cap table. Different investors are looking for different rates of growth. Different investors are looking for different ways of working. Different investors have different ways of gauging, analyzing, managing expectations with the founders and so on. So I think it's important that before somebody signs a term sheet, you are aware that, Ricardo is more focused on growth numbers as opposed to bottom line profits this stage of our journey, right? That I know that Ricardo is more focused on us scaling into 20 new markets in the next 2 years as opposed to going deep and broad in these two core markets. So I think it's important to know, what is the investor looking for? Can you genuinely satisfy those needs, right? Now, the answer to that is that, yes, if I can do a lot of those things, I move ahead. But if there's a fundamental disagreement in your operating thesis and your philosophy for growth, then I think the founder startup needs to rethink what they should be doing in that case. And, should they move forward or not? Now, obviously for startups, sometimes, desperation kicks in and they really want the money. It's the evil that we have to live, being in the startup world. And sometimes, you make those decisions just to keep things afloat. I'm not going to say if that's right or wrong. Sometimes, like they said, desperation leads to invention, or making things better. So it becomes that personal journey for the entrepreneur to figure out that if I take this bite because I'm desperate, can I turn this curve the way I want to? So I think it's a combination of those things. But I'll be honest. You will, as an entrepreneur, you will always get to the point at some point where you might feel desperate and make a decision that you might regret. Which is why managing your cap table it should be fairly diverse. But it's important that majority of the cap table is aligned with you from your fundamental business philosophy, your product philosophy, and just your general philosophy of what you want to build. You may have some passives along the way, some, innate investors that you may take money from, but that are not managing you. So it's okay to go down that path as well. But the building of the cap table should be majorly biased towards highly aligned investors.
And how, when you have a very nice capital and all that, and you need to pivot, do you think they would all go along with the idea because they believe in you as a person? Or quite on the contrary, they might be like, you know what, I invested in something and now we're pivoting something else. I'm not that comfortable. How do you manage that, actually?
Yeah, it's all a function of time and the value you're seeing as an investor. If somebody comes and says to me, hey, Ricardo, thanks for the investments, but I just want to share that we're going to be thinking about moving in this direction as opposed to what we thought about a year ago. I think investors are, for the most part, the larger ones who are putting in a lot of money, and even some investors who are putting in money through, syndicates and so on. They understand that there will be changes along the way. If you are expecting things to stay stationary, status quo with your founding team, then I don't think you should be an investor, first of all, right? Because things will change. So for me, as an investor, I do expect some changes. And as a founder, as an entrepreneur, it is very important. I would say two things. Number one, don't surprise your investors, right? If you're thinking of something different, the communication channel has to be open and frequent and meaningful. So that level of transparency, that level of communication where you're sharing ideas and progress and changes and challenges is important, because then you're co-building. You're using the effective, comprehensive brain power beyond just yours to make the right decisions, right? And the second thing, in addition to the communication aspect, to manage these investors when changes are taking place, is show me the proof, show me why you're doing what you're doing. And this is where, going back to the objective set of execution criteria, product, go-to-market, analytics, data. This is what we're seeing. This is what we've done. These are the pilots that we've run. This is what failed. This is what didn't work. This is what worked. This is what the customers are saying. This is what we're hearing globally across the ecosystem. And therefore, we're making these decisions based on these, objective criteria, and use that as your ammunition, along with creating the right roadmap for the future where you're getting inputs. So again, easier said than done. I'm simplifying this drastically. Yeah, along the way, you might have investors that, no, I'm sorry, we need to draw the line or we need to pull out. Or you as a founder might say, yep, this is where we need to draw the line for us as a company. So things can be a little tricky too.
Now, there's a lot of buzz around AI, as we pointed out already. Do you think all the startups should be building something with AI, or not really? They can actually get by without using it.
Should everybody be doing the same thing? No, I don't believe in the herd mentality. But is everybody likely going to be doing AI? Yes, in some fashion. The question is, what are you using it for? Large companies have been using AI for 20, 30, maybe even more years, and they should continue to do so, because that's going to be more effective for them in building their algorithms, their risk management engines, their software for personalization, for internal processes, for cost management, for more productivity. So those things are a no-brainer. But if you come and say to me that every company needs to build an application layer offering for the consumer markets just because they can, I don't think so, right? Should you be building your own GPTs internally to use? Yeah, absolutely. It's very productive. So I think you have to be aware again about, it's machine learning, there's AI, there's deep learning. What aspect of AI are you talking about? Right now, most of the people, when they talk about AI, they're talking about what's in the news, right? It's chat GPTs of the world and so on. Yeah, it's that very, very, what I call, it's the personalization of AI that's at your fingertips that they're talking about. Now, for every company to do that and do that well doesn't make sense. It may not be the use case you're solving for. Building AI is expensive, right? Monetizing AI is expensive. It is not that easy. Getting the right talent in-house to build AI is very expensive. And then maintaining that also is not that simple, keeping up with it. So I think before anybody goes and says that, yep, we're going to be all in on AI as an offering, is different from, yep, we'll be using AI as a tool to improve what we want to build for the future for offering. There's a difference in them. So I think it's the latter, which I'm promoting right now, which is, obviously used. It's a tool. If I give you a better hammer, absolutely, I'm going to use that when I'm building a house, right? As opposed to a screwdriver. So AI is unfortunately become a sledgehammer. Everything looks like a nail these days. But smart people will know, is it the right use case? Do I have the right resources? Do I have the investment capability, right? And can I truly drive value for the consumer and the customer, a measurable value? So there are some frameworks around this before you just jump in and start doing things in AI.
Sumeet, I like asking some personal questions, and I'm very curious. I'm not going to say the last 2 books you read, but 2 books that have changed your life, that you still go back upon and say, you know what, some of the ways I think and the ways I act are because of this book, ignoring all the classical, all the religious stuff, but like business books.
Yeah, no, for sure. And I would say the one book that I've really enjoyed is Sapiens by Yuval Harari, and it's a book that really brings together history, anthropology, technology, human evolution, religion, all of those things together, and makes you understand and realize, how we as a species, the sapiens, came to be the most powerful entity or species that has existed on the planet in perpetuity. But the beauty of that book, it really breaks things down into how the whole evolution happened. I always say that nothing around us is an accident, right? It takes work. It takes years and decades. In this case, it takes millennia. So this book, to me, it just helps me kind of really break away from all the stuff going on a daily basis. I go back and kind of read like a few pages every now and then. But, for anybody who loves to really think through, why did we become who we are, right? How did civilization happen? So that's one book I really enjoy. The second one is Atomic Habits. And this goes back to what I said earlier, the whole philosophy of progress over perfection, right? And breaking things down into smaller pieces, doing things that are more achievable, changeable before you boil the ocean. And, I made the fundamental mistake early on in my career of being the perfectionist engineer, that everything has to be just right. And, the ship sails and nothing happens. So one of my managers and leaders, back many years ago, he said to me, you're doing things really well, but you really need to break away from that perfection mindset, because everything you do is getting delayed or is not seeing light of day, or it's not really getting the true value that it should get. And that, kind of changed my mindset. It's a very small thing, but my mindset now is definitely towards what are the little things that I can do to make things better longer term, as opposed to that one big thing. Of course, as an entrepreneur, you're looking for the one big thing always, but at the baseline, it is the little things that you're doing. So I think those 2 books have always resonated with me, and, I still go back to them.
Very interesting. Sumeet, as we, getting to the end of the podcast, if people want to reach out to you, what's the best way of doing so?
The best way to reach me, by all means, I would say LinkedIn is the easiest. But my email, it's my Sumeet, Sumeet @evokeimpact.com. So just reach out by email or LinkedIn, either is fine. And that's Sumeet @evoque impact.com. That's my work email. And I'll be happy to engage, just have a conversation and keep the innovation juices flowing.
Sounds good. Sumeet, thank you so much for your time. It's been an absolute pleasure having you here.
Absolutely. Thank you so much, Ricardo.
Thank
The
you.
podcast is also sponsored by Notion.so. Notion is offering 6 months for free for new users. Make sure you check out our website, thestartupevents.co.uk, to redeem this offer. This podcast is also sponsored by startupnetworks.co.uk. Startup Networks, it's an online forum where you can find all the resources you need to run your startup, from grants to investors to tips and tricks on how to be successful in your startup. This podcast is also sponsored by ODEV Tech. ODEV Tech is your premier software development partner. Make sure you check them out at odev.tech.